and today's gonna be the most important lesson. Risk management is very important. Why? Because it gives you the power to control your emotions. The most important tip that you should apply in everyday trading, it is to keep your capital safe. The cash is here, and now this is the most important thing, to flip this 1k USD to 100k USD, right? So now, do not full margin, use risk management, and let's start. Okay guys, this is day 5 of me giving education to Afif, and today is going to be the most important lesson. But first, I have one question to ask. I've taught you 4 days. What have you learned from me for 4 days?
Banyak je. Saya banyak belajar dengan you. Firstly, SNR saya belajar dengan you. Confirmation, breakout, and the last one is time frame.
Correct. So 4 things I've taught you. Types of SNR, which is top 2 lessons, time frames, and confirmation. These are the 3 things about analysis. Now I'm going to teach you how to manage yourself as a trader. So let's start, guys.
Let's go.
So now I'm going to teach you the most important thing in trading. And what is that? It is risk management. Right? Risk management is very important. Why? Because it gives you the power to control your emotions. Not just to control emotions, it makes you consistent in profiting and trading. And that is the most important thing, obviously, right? For example, a lot of traders, they like to full margin, and they MC. Sometimes they profit a lot, sometimes they MC. But most of the time, from the feedback of those that everyday gamble, they tell me, oh, I MC gap. I don't want you to be like that. I want you to flip 1k USD to 100k USD, right?
Okay,
so, do not full margin, use risk management, and let's start. So, what is the first tip? The most important tip that you should apply in everyday trading, it is to keep your capital safe. Always keep your capital safe. Why? Because let's say you have 1000 USD, and that 1000 USD is your capital. It comes from your bank account. That 1k has emotions. It has hard work. It has tears. It has blood inside that 1k USD. Because it maybe come from your mom's pension, maybe it comes from your 9 to 5, your 24/7, whatever. You know, maybe you pick cotton for that money. Maybe it's your hard work, and that has emotion in it. When you have emotion in trading, you're gonna lose. That is why you must always keep your capital safe. And that leads us to our second point, right? What is our second point? Our second point is to only risk 10% of your account. For example, right, you have 1k USD, which is your hard work, your blood, your tears, your 9 to 5, your 1000 USD. You can only risk 10%. That is your risk. That is, for example, when you lose, let's say you lose a setup, your risk is 10%. That means it is 100 USD, right? 100 USD of 1k USD is quite less. You can easily recover that amount. That is risk management, right? So 100 USD. It's very easy to know, okay, I'm going to risk 10% per setup. It's very easy. But what is hard for most traders is the understanding of the lot size. And it's very simple actually. So 100 USD, what is going to be a lot size? The lot size is going to be 0.25 per setup. 0.25 per setup. Why? Because let's say your SL is 50 pips and you use 0.25. If you layer properly, the risk would be per setup would be around 100 USD, right? Simple as that. Actually, you can use any lot size. If you think about it, you can use 0.5 also. If you layer the last one, you can use 0.5 because you risk lesser. But it depends on how you layer, and I'm going to teach you that later as well. So first tip is to always keep your capital safe. Second is to risk 10% of your account. The third tip. What is the third tip? This is the most important tip for flipping your accounts. Right? Most traders, they don't want to learn about how to manage your loss, whatever. That is most important as well. But you might want to learn how to flip Gao like me, right? So, which is very important because you're flipping how much?
$500 USD one day.
No. You're gonna flip how much?
100k. 100k.
From 1k to 100k, right?
Yeah,
Where's the cash? The cash is here, and now this is the most important thing, to flip this 1k USD to 100k USD, right? So now, the third tip is to risk more when you have profits. For example, right, you have 1k USD, you risk 10% of that account, okay, you profited 2k USD, maybe you follow me, you flip that to 2k USD. Now, you have breathing space. You have extra 1k USD, that is your profit. When you have profits, it is not hard work from whatever picking cotton. It is from your own trading, right? There's no emotions in it. So now you have 2k USD, 1k USD in profits. That 1k USD you can risk to flip even more. That is what I do. For example, I flip 10k USD to 1 million USD. How? From 10k USD, when I first started day one of me flipping to 1 million, I flipped 10k to 30k USD first. Slowly, day one was very slow. To 30k USD, once I did that, I started risking more. I started risking more of my profits because I already had profits. It is not my capital. So, for example, now you have 2k USD, you can risk your 1k USD to maybe 10k USD. You can risk more. You don't have to risk 10% anymore. Maybe you can risk 50%. Maybe you can risk 80%, up to you. But as long as you're not losing your capital, as long as you're only risking your profits, then you can flip even more because there's no emotions in it. You can only analyze like what you have learned from the 4 lessons. You can analyze and you can flip. Simple as that. So that is the first tip, second tip, third tip. You have to combine all of them, and this is the basics of risk management. So any questions?
Why you marking dekat sini I tak faham
I'm marking sini. Sekejap, let me mark finish first.
Right.
Okay, so this is leading to our fourth tip on risk management. This is one of the most important tips in analyzing for risk management, right? The reason I mark there is because of a daily zone, right? Bearish candle, bullish candle, this is the first thing I taught you. Bearish candle, bullish candle, support form at 3735. Gold touched it and it instantly flew, right? Simple as that. But why did it fly? It's because of confirmation, whatever. Now, how do we apply risk management into this, right? How do we apply risk management into this? It is very simple. First, you have to understand in risk management, there is low risk setup, medium risk setup, high risk setup. So, let me just draw it out for you. So, for example, okay, let's say you have a low risk setup, right? A low risk setup, that means you can risk more, right? Because there's more probability for it to fly. Because it is low risk. Let's say it's a medium risk setup, right? If it's medium risk setup, then you risk lesser. You can risk lesser. And if it's a high risk setup, then you can risk even lesser, right? So you have to understand this simple concept, right? Low risk setup, risk more. Medium risk setup, risk lesser. High risk setup, risk even lesser. So this is the simple concept. Now, the most important question is how to identify these. How to identify whether it's low risk or whether it's high risk. Let us go down to the real life market. Let me show you, okay? We go back to the same example at the daily time frame. Here. Okay. So now we're on a daily time frame. As you can see, we have a daily support form here. So we have a daily support form. It is a strong zone, but we don't have confirmation yet. So let us find for confirmation first. For example, right now, okay. Right now, what do we have? We have a daily zone here, which we marked out already, and then we have a H4 new SNR form. On the H4, we have a H4 new SNR form right over here, right? And that is the second confirmation for what I taught you, right? So that is the second confirmation. And what did I say about this? If gold touched this second confirmation, it is a medium risk setup. Why? Because there is no breakout yet. There is no breakout yet. There's 3 confirmations: rejection, new SNR form, breakout. There's only 2 confirmations, which is rejection here and new SNR form. So this is the medium risk setup. That means if gold touched back this, this zone, you should risk lesser. At 3.2, gold touched the zone. So that means if gold touched back this new SNR form at 37.33, you should risk lesser. But obviously you touch it yet lah. So now we understand you should risk lesser on this medium risk setup because it is only 2 confirmations. But let's say the third confirmation happens, right? Where did the third confirmation happen? At the breakout of the resistance here at 3749. Third confirmation broke out. Gold touched it, it instantly flew. On this setup, you can risk more because there's already the third confirmation. You have all the higher time frame confirmations, all the confirmations I told you, the 3 confirmations. Once that form, that setups become low risk, then you can risk more at the low risk setup. And as you can see, once it broke out, touched it, flew all the way up to all-time high. How many pips? And by the way, we caught the same setup. We caught it around 3,000 pips. 3,000 pips in one single setup because it was a low risk setup because we had all the confirmation that I taught you about. So learn to identify low risk setup. Low risk setup is when you have all the confirmations, you have higher time frame confirmation, you have higher time frame zones. That is a low risk setup. Medium risk setup is when you have a bit of confirmation, for example the 2 confirmation, you have lower time frame zones, lower time frame confirmation. That is a medium risk setup. And the high risk setup, it is a touch trade. Touch trade meaning, for example, I'll show you. If it's lower the time frame, the higher risk the zone. Okay, for example, touch trade is like this. Okay, we have a resistance here, bullish candle, bearish candle, resistance. From resistance break, go touch the resistance break beyond support, instantly it flew. Maybe you just want to enter here, you don't want to wait for confirmation. You just want to enter at the H1 resistance break beyond support without any confirmation. That is a high risk. That means that you should risk lesser, right? So remember this: low risk is all confirmations, higher time frame. Medium risk is 2 confirmations, lower time frame, higher time frame, doesn't matter. Third one, the high risk, which you risk lesser, is the touch trade. So yeah, when you can apply the understanding of high risk setups, low risk setup, medium risk setup, you can apply the 3 tips I gave you guys, that I gave you just now, then you can properly have risk management. Simple as that. So, any questions?
So far, tak ada question faham.
So that is it for today's education. I hope you learned a lot today, because soon you'll be flipping this 1k to 100k USD next week.
Yes,
next week, right? Okay, Chun. And if you guys have any questions about risk management, about trading, just ask down in the comment section, because I'll be replying to all of you later. Santai kawan, and I love all of you.